They said Bitcoin was just a digital illusion, backed by nothing. But what if that's precisely why it's poised to disrupt everything we know? With billion-dollar bets, national interests, and economic upheavals on the horizon, Bitcoin's next move could redefine the financial world as we know it. Are you prepared? Bitcoin's journey has always been a test of sentiment, a dance between extreme optimism and looming doubt. Yet, even amidst volatility that far surpasses traditional markets, Bitcoin rebounds with a vigor that reveals a market still hungry for it. Fred Thiel, CEO of Marathon Digital Holdings, recently shed light on the potential risks tied to Bitcoin ETFs and market liquidity. ETFs operate on a T+1 basis, purchasing Bitcoin after the market closes. This exposes them to weekend price volatility that could lead to sharp price drops when regular investors liquidate holdings en masse. The real concern? Concentrated ownership by governments or large entities that could limit liquidity, amplifying market reactions. Pair that with lost Bitcoin keys, estimated at 20% of total supply, and the available pool shrinks dramatically. But even amid the chaos, optimism brews. Crypto visionary Raoul Pal highlights that despite recent market downturns, there's one crucial test. Is the technology here to stay? And the answer is a resounding yes. Over $60 billion in venture capital has poured into crypto, fueling startups and innovations that could spark the next bull market. The global narrative has shifted. In Asia, advancements like account abstraction promise to onboard millions to Web3. Meanwhile, regulatory scrutiny tightens in the UK, proving that crypto is no longer just a wild frontier, but a maturing market with real stakes. Pal mentions that while mainstream media obsessed over collapses like FTX, crypto insiders saw opportunities. During peak fear, indicators like the year-on-year change of M2 money supply, which tracks liquidity, started showing positive signs. This pointed to a potential bottom in the liquidity cycle, a golden opportunity for those looking long-term. As BlackRock, Fidelity, WisdomTree, and others file for spot Bitcoin ETFs, optimism returns to the market. The implications are enormous. Since BlackRock's filing in June, Bitcoin has surged 25%. But what happens when these ETFs start bringing in significant capital flows? Despite all this, macroeconomic factors like the historic yield curve inversion, a potential recession signal, keep investor optimism cautious. Yet, as Pal argues, when economic pressures ease and new capital flows into crypto, the outperformance cycle restarts. Bitcoin leads, capital spreads, and the ecosystem surges. Think of it as a chain reaction. Bitcoin rises, ETH follows, and other less liquid assets experience outsized gains as investment diversifies. Now consider Fred Thiel's point about governments potentially hoarding Bitcoin. If the US held 2 million Bitcoin and its value soared to $20 million per coin, that could offset trillions in federal debt. This strategic reserve concept could drive a new geopolitical race for digital assets, with countries establishing Bitcoin mining and reserves for national security. A future where nations leverage Bitcoin not just as an asset, but as a tool of financial power isn't just speculation. It could become reality. Bitcoin's next move isn't just about price speculation. It's about survival in a rapidly changing financial landscape. From ETFs to national reserves, from massive venture capital investments to market-defining regulations, everything points to a future where Bitcoin's role becomes both strategic and essential. What do you think will be Bitcoin's biggest catalyst in the coming months? Drop your predictions in the comments, like this video, and subscribe for more deep dives into the crypto world. Until next time, stay informed and stay ahead.